Infrastructure and power stocks are having a field day today, as they have been actually for the past several days now. And one of the reasons why they appear to be doing well is because there seems to be a relaxation in the Reserve Bank stand in terms of granting some flexibility to the loans lent to infrastructure companies. As we have been explaining, until now, a 25-year loan, say for instance for a road project, which actually gives toll earnings over 25-30 years, have to be funded only by a 7-year loan by banks because they don't have liabilities over that period. Their deposits are maximum 5 to 7 years, and that is why even a 25-year project is funded through a 7-year loan. Now the Reserve Bank allows banks to take a 25-year loan, break it up into 4-5 parts, and give a 5-year loan which will be rolled over, sold over to somebody else at the end of 5 years. The new flexibility is this rule can be extended even to existing projects. So projects of companies like Gammon India could benefit. But before I invite Mr. K.K. Mohanty of Gammon Infra on the show, let me also add what the governor said yesterday about this new category of rewriting of old loans. Rajan seemed to say that if there is a loss that banks take on their books, they will have to be provided for. So the recasting of the loans is not going to come free for banks. Just listening to what Rajan says, then we will have Mr. Mohanty to comment.
We have to go towards provisioning norms which recognize the size of the losses. So when I say move, I also mean that we have to move to recognize the losses. It is in the interest of everyone to recognize the losses as they come, to set aside money for that so that you don't have a surprise, and at the point where you have to make big investments, the bank can't do it because it doesn't have enough capital. Let's recognize the true state of the banks and move on.
All right, moving on. K.K. Mohanty, Managing Director of Gammon Infra, joins us. Mr. Mohanty, you heard what the governor just said. Are you already speaking to banks? Or if you can tell us how this 525 rule may impact a company like yours.
Lata, let me first correct you that not due to this 525 rule our performance is looking better. Might be we are slightly looking better. We are putting all the hard work in this difficult time and trying to perform on projects.
No, I'm not referring to your stock. I said power stocks and infra stocks have been doing well. In any case, please go ahead.
Yeah. Second thing is this 525 will be an extremely good initiative for the infrastructure, especially the PPP project, but one with one rider, not at this level of interest rate. Might be this is little counterproductive of 525 principle at this type of interest rate, because the major portion of the upside of the project will get into interest. This will be really useful when the interest rate comes to single digit and the surplus cash is generated for the investor to get some upfront return on their investment.
Okay, but Mr. Mohanty, wholesale rates have fallen a bit. In the bond markets. What is the interest rate or average interest rate of your any average road project? And if you were to recast that loan now or go into a takeout financing mode now, what will be the interest rate?
See, presently our interest rate on construction projects are between 11 to 12%.
And if you went for a takeout?
We take out after completion might be between 10 to 11. So it will be 100 basis point drop.
And if you go for 525, what will be the new interest rate on the first 5 years?
The interest rate I don't think will vary much. Might be 25 basis point maximum. Interest rate will remain same. What the point I was making is, at a 12% interest rate, instead of we take 25 years to pay the interest on the same principal outstanding, rather than in 10 years, then the major portion of upside of the project will get into interest servicing of the debt, which will not be a very productive situation for giving return to the equity. Yes, this will be an extremely good initiative on two counts. One is the upside of the project will go up, so the investor on his investment will get a much higher return. Second thing is, in the initial stages also, the investor can get some return from their investment because there is only interest outflow and there is no principal repayment.
Okay. Okay. Yeah, are you likely to take advantage of this anytime now, or will you wait for maybe in a year from now if interest rates were to fall?
As a first step, one of our projects which is under revalidation, we are trying to take a 525 advantage in that.
That's a new project.
How it is working.
That's a new project.
We are just starting a project.
Okay, and banks are very happy. Are they very proactive in looking at the 525 way of financing?
The knowledgeable banks like IDBI and all are looking at this positively.
Okay. I just wanted to know if for an older project, the 525 looks attractive, say 1 year down the line when probably interest rates will be lower, or at least market rates will be lower by about 75 basis points. Let us assume you come into a 10% financing bracket. At that time, if banks have to provide for the notional loss, will it be useful?
Now see, what the governor of RBI was telling, this is a age-old practice in the financing sector. It is called a early warning signal. If a loan is showing early signs of any stress, there has to be early warning signal and provision provided for, so that when the actual loss happens, it is not a shocker or it's not a surprise. So this is a age-old practice, so it might be different financial institution, financial companies who are camouflaging it by a different way or sidetracking it. So what he is talking about a very prudent norm in the financing, where a early warning signal is recorded and some sort of corrective measure or provisioning is made, so that when the actual impact of the incidence of the transaction comes in, there is no surprise in that.
Okay, so hypothetically, if one of your current loans were to go into the 525 mode, will banks have to take a hit? Will the financing cost fall, and therefore that much has to be marked as an NPV loss?
No, I don't think there will be a difference on this 525 case.
Okay.
525 case will make difference between the two situations. One is if an annuity project is there, 525 at this type of interest rate may not help a lot, because in annuity project the equity return itself is in the range of 12-13%. If you are paying 12% interest, then you are taking away the return on the equity side. In a BOT project, in a toll project, if the return is in around 14-15%, it might slightly help. But it will be real effective of this will come when the interest rate comes to single digit for infrastructure and 525 formula is implemented, so that the investors will be very happy to invest into these projects, because they will have two advantages. They will have a better return on their investment, and second thing, they can also get a upfront return, some dividend on their investment, which is not likely today, because past 8-10 years it is not practically possible to give any return on equity in a PPP project.
All right, we'll leave it at that. Mr. Mohanty, thank you very much for joining us and clarifying that bit.